Hello. Thanks for watching this video. If you are a new visitor to my channel, note this video is part of a series of videos, and please see the earlier videos in this series. They build on the knowledge in the prior video, and it is essential to understand the flow of thought to make complete sense of this video. Trend change. Whenever I talk of a change in trend, most people instantly assume that a rising trend will change down, or a declining trend changes to the upside. We all appear to operate with a myopic vision, and as explained before in Illusions of the Financial Markets, we tend to only expect what we want the markets to do. In fact, almost all traders consult an analyst, not to understand what the markets are likely to do, or how to understand market action. The only thing they want to hear is that their belief is true, and their expectation will indeed unfold in the market next. They only want to hear what they think is correct. If an analyst disagrees with their view, then ridicule and abuse is thrown at the analyst. An interesting behavior, and one that makes a lot of retail small traders lose a ton of money. What do you think happens when time cycles indicate a change in trend? Most traders expect a rising trend to turn down, and a declining trend to turn to the upside. However, they miss 4 different actions that the markets also unfold on the trend change days. Markets exhibit 6 different kinds of trend change. 1. A rising market turns to the downside. 2. A declining market turns to the upside. 3. A rising market turns into a sideways pattern. 4. A declining market turns to a sideways mode. 5. A sideways market starts going down, that we also call breakdown. 6. A sideways market starts moving up, and we call this a breakout. Without an understanding of this behavior, trying to trade the time cycles will be met with disaster. In the next video, I will show you what direction to expect, what patterns to watch out for, and when is the best time to trade the markets.